Good afternoon, everyone. I'm going to rise you from your post-lunch slumber. We've got a very exciting panel ahead to kick off the afternoon sessions to look at the future of Africa's capital markets. Now, before I introduce you to our panel, I'm going to make a few framing opening remarks, particularly on the current state of Africa's capital markets. My name is Robert Besseling. I'm director at a company called EXX Africa. We provide analysis and forecasts on political risk, security risk, and economic risk across the African continent. Now, starting off with the state of Africa's capital markets. With a couple of statistics I wanted to throw at you, which come from our friends at PwC, where you can already see that the state of Africa's capital markets, just looking at last year, it's a bit of a two-sided argument there. Far fewer IPOs and further offers were made in 2018 than in many of the years before. Also, the value of these IPOs and FOs was far lower. Granted, there were a few landmark flotations. Vivo Energy, by a dual listing, JSE and LSCG. We got a potential very exciting Bharti Airtel's African operations moving to the LSCG as well later this year. And then, of course, looking optimistically forward, there's a real anticipation that after the elections in South Africa and Nigeria, key capital markets, there will also be optimism and a real boost, particularly for the banking sector in Nigeria. So talking about performance, we're represented here by three capital markets institutions, who you can already see the performance here. I'm going to zoom in quickly here in the BRVM. Relatively loss of performance over the past few years, although I will ask you a little bit about this later. And that is surprising to a certain extent, where you look at the fastest growing economies in Africa. 6 of them are in West Africa. Many of them are indeed members, constituents of the West African Regional Stock Exchange. Granted also, in terms of sovereign debt exposure, many of the West African governments, including Côte d'Ivoire, for example, and some other BRVM constituents, relatively low sovereign debt, and that, of course, should add more liquidity to the local West African markets. Focusing on the FTSE, JSE All-Share Index there. Last few years, we can say volatility is the key word. And that, unsurprisingly, is due to the political transition that we have seen over the past 14, 16 months or so, and again the idea that South Africa is moving towards a new dawn. Now, let's look at the state of South Africa's capital markets. There's a couple of points to make. First of all, in 2018, undeniable, equities had their worst year in a decade. So we're now looking forward for greater optimism and new flotations there as well. Much of that negativity last year was still derived from the Steinhoff scandal of the end of 2017, where the share price has barely recovered to sensible levels. There are also some arguments in South Africa and elsewhere about the flotation of a number of companies and entities involved in the so-called state capture. Companies like Oak Bay Resources, for example, which I will very happily ask Nikki about in a moment. And similarly, that's really triggered a debate about what the role of a regulator is, and also to what extent capital markets and the regulator should have a duty to protect their investors. Now, South Africa's economic outlook is looking certainly much more positive moving forward, potentially, slight more hiccup this year, but moving forward, certainly a stronger outlook for South Africa. And that should potentially move some of these key capital markets like Nigeria and South Africa out of the bottom 10, the slowest performing economies in Africa. Similarly, Angola, about to start its own stock exchange, also similarly needs to be dragged out of this bottom of the pile. So, what factors will determine the future of Africa's capital markets? One, as a political risk analyst myself, will be looking at some key issues, coups, terrorism attacks, which have short-term impacts on the performance of Africa's capital markets. Beyond that, looking at longer-term trends, which have a longer-term impact on capital markets. In particular here, the idea of populism and nationalism, despite much of the talk about regionalization, still being a key factor. And we have seen some African governments over the past few months and years using Africa's capital markets as a weapon, as political risk, by forcing local listings of, say, some of these mentioned telecoms companies. Political risk is a key issue, and we'll have to keep on looking at Africa's capital markets throughout moving forward, and key to try and identify these strengths. A second aspect that I'm very keen to look at and discuss with the panel as well is the management of debt markets and equity markets moving forward, and particularly seeing some African countries certainly facing a debt sustainability issue moving forward. At the same time, this might create some optimism on the front of forced privatizations of state-owned entities. Will we see further privatizations in South Africa, in West Africa, in Ethiopia, causing a real momentum for stock markets? More regionalization, which I will ask you about in a moment, and also a need to strengthen governance. My final point is that there is a real need to reform Africa's capital markets, to boost liquidity, to improve governance, and to attract more collaboration moving forward. So, I'm cheating this afternoon. I'm not going to answer any questions from you. Instead, I'm going to hand over to my panel, who I'll briefly introduce while I'm still up here, and then I will sit down and put on my moderator cap. Ladies and gentlemen, we have Nikki Newton-King, who's the CEO of the Johannesburg Stock Exchange. Next to her is Ibukun Adebayo, who's the co-head of emerging markets of the London Stock Exchange Group. Then we have Dr. Edo Kosi Amenumve, who is the Director General of the BRV and West African Bourse. And then we have Mr. Sanjeev Gupta, Executive Director of the Africa Finance Corporation. Now, can you hear me? Yeah, perfect, excellent. I think to start off, I've been talking about some of these challenges that capital markets are facing across the African continent. But we need to talk about the solutions as well. Ibukun, I'd like to start with you, talk about what the London Stock Exchange Africa Advisory Group has been doing, potentially to start moving forward and finding solutions to meet some of these challenges. Over to you.
Thank you, Robert, and it's a pleasure to be here. Thank you very much to the Invest Africa team for putting on another marvellous event. I agree, I think you'll all agree, it's been fantastic so far. The LSE has through its Africa Advisory Group, been extremely focused on the challenges that are facing many African capital markets. Now, obviously, there are a broad spectrum of markets and a broad spectrum of challenges, but the main challenges that we have identified through this working group over the last 3 or 4 years are ones that are not surprises to everybody. So here are challenges around lack of financial depth, which is primarily based on policy and regulatory gaps, issues around information asymmetry, the fact that information isn't disseminated in a timely manner, therefore leading to market inefficiencies, and other issues as well, which are related very much to the lack of foreign participation in markets and how to get deeper markets or deeper traction from foreign capital. So a lot of the work that LSE has been focused on of late is how to actually solve those challenges. Now, we are extraordinarily lucky in our Africa Advisory Group to have representation from key captains of industry, Africa's top businessmen and businesswomen, but then also representation from key investors as well. Some of the multilateral development banks, AFDB, for example, the Africa Union also has representation. Now, this group over the last 2 years has been working with the University of Cambridge on all of these challenges that we've just described, and there are more, and there are many, to see what can actually be done. Now, a series of report recommendations were released at the Africa Investment Forum of the AFDBs back in November last year, and focused on some key areas. And those areas are the ones that I just want to talk about briefly here. So getting foreign capital to come to Africa is not as easy as it sounds. Exchanges like South Africa and JSE have done particularly well, and there's some very interesting examples to learn from that. Let me take the example here of passive investment flows, which has now become a very significant form of investment flow in the US and other countries. In Africa, you only have, out of 45 markets, you only have 10 markets that are actually classified. So this is under your standard classifications of frontier, emerging, and developed market. There are only 10 that are actually classified. 8 of those are frontier markets, and only 2 markets are in fact emerging markets, and therefore eligible to have investment flow directly, obligatory investment flow directly into those countries. So what can African markets do for that? Now, at the LSE, we have a very, very well-known business called FTSE Russell, which has a country classification business, and market classification in terms of the dealing landscape, clearing and settlement processes, regulatory positions, are all a range of areas that can be looked at. So this is part of the work, Robert, that we're engaged in. It's deeper and more broad, but just as a starter, I thought perhaps that would be a nice opening gambit for this discussion.
Brilliant, yeah. I think a quick follow-up to that as well. Do you think, to what extent can these challenges be addressed? And for example, we've got a great excitement around Bharti Airtel, for example, we were talking about earlier. Why are these companies turning to Africa's capital markets? And how can these challenges be addressed?
Well, I think there's obviously been a very, very a slow opportunity that's continuing to mature and actualize across Africa. And I think the markets themselves across Africa are showing that they are becoming more fit for purpose in many ways. One way, for example, is the diversification of the asset classes that are now available to be invested in. There is, as I mentioned, some extremely good work that's been done by the JSE in terms of attracting foreign investors. And I believe, Nikki, your market now is more than 40%, if not greater, in terms of foreign participation. But creating the rules and regulations that are not just fit for purpose for Africa, but potentially to an international standard in the continent is going to be the winning game to attract companies like Bharti, but also others who are also focused on being part of the Africa growth story.
Brilliant. We talked always about the importance of boosting liquidity, and for that, collaboration is absolutely crucial. Sanjeev, I'd like to ask you in terms of the potential for further collaboration between Africa's capital markets and development finance institutions, particularly for infrastructure assets. What are your views on this?
Yeah, so firstly, good afternoon, everybody, and thanks for coming back after lunch. As you might have noticed, I had to run back. I was that keen to come and talk about it. The one thing that I would certainly like us to avoid is try and analyze the symptoms of what is a very deep-rooted malaise, if one can call it that in medical terms, that we have to handle. I think fundamentally you have an issue in the continent. And the issue is that by most standards, the actual production capacity of the continent is not represented in the capital markets. What you see largely, barring a few exceptions, is consumer stocks, the consumption side of the economy being represented. And that is not sustainable. So today, when a global investor wants to get an exposure into the continent, he wants to see the core economy, the real economy. And where does he invest? Number one. Number two, we can keep talking about it, that liquidity is a challenge, domestic savings are not there, but that's a reality. Now, when you look at capital markets anywhere in the world, and I don't care what people say, if you do not have a basic critical mass of domestic long-term capital cushioning the capital markets, you cannot have sensible long-term asset allocations and investment decisions coming from global fund managers. That can never be your sustenance, right? And that's the other problem we have in Africa. So you asked me a question, how do we see capital markets? Frankly speaking, we don't see it, okay? As an African DFI, we raise capital from every other capital market except African capital markets, okay? And that doesn't bother us. But what does bother us is because we are a long-term player, we do invest in industry, natural resources, and infrastructure for the long term. More often than not, exit concerns confuse us and challenge us. That if capital markets are not going to grow, if domestic savings are not going to form the bedrock of domestic capital, because that's true. Domestic savings in Africa today is not translating into domestic capital. It is funding fiscal profligacy. if I may be a little controversial. Right? So that bothers us, that how are we going to put money into long-term projects, bring in investors, and not be able to offer the exits? You ask me, how do we solve it? At this moment in time, not a priority for us. Okay? What is a priority is to see whether some regionalization can take place. People talk governance. I think governance and regionalization and opportunities all go hand in hand. One feeds off the other. So we are a big proponent and a big supporter of creating a regionalization which allows domestic savings from one country to go into another country. For example, Botswana has a large pension fund industry, but doesn't have a capital market deep and wide enough to invest in it. So why can't we have laws and rules and regulations that allows that money to go into another African country? So those are the thoughts and themes that I don't want to certainly monopolize the conversation, that I would like us to explore as to what will then finally match where there is opportunities with where there is domestic capital, and how regionalization and harmonization can create that environment for capital markets to thrive in.
Thank you. Yeah. I want to shift our attention now to the two African stock exchanges represented on the panel today. Nikki, I threw some remarks there already regarding the performance of the Johannesburg Stock Exchange last year, some of the political indicators behind that, some of the economic indicators. What is the competitiveness of the Johannesburg Stock Exchange? And also, how do you see 2019, the remainder of 2019, changing its outlook, particularly in hindsight of a rather dire few years behind us?
Yeah, so thank you for that opportunity and for the opportunity to be on the panel. I just want to reflect on the fact that I agree with my colleagues. We should look at African capital markets from a competitive landscape perspective. We don't have a celestial right to exist as capital markets. Nothing preordained that capital markets should exist at all, let alone be successful. You compete for attention. And you compete for investor attention every second of what you do. And we can talk a little bit about some of the examples that have been challenging for us. So notwithstanding your size, you compete every second of every day for that. And I think that means a couple of things. It means you have to fundamentally look at your DNA with regard to the regulatory standards you adopt, including governance and the trading and the disclosure standards. You've got to look at the systems you use. You've got to look at the exit mechanisms Sanjay's talking about. If, for instance, you have great regulatory environment and a great trading environment, but when it starts to get rocky, you close the markets. Okay, what does that do to an investor? It leaves an investor with a sense of, I can't trust that I can exit when I need to exit. So when you run an exchange, you actually have to be very clear about the fact that you have to run it at a globally acceptable manner. Now, globally acceptable, locally appropriate. There will be local variations on regulation, etc., that you need. But you simply can't allow oneself as an African, or for that matter, any smaller exchange, to think about it that we're special. People will have to come to us. Nobody has to bring their capital to you. And so that's a very important thing to think about, because you have choices as you run markets about where you set regulation, how open your markets are. Do you have capital controls? Don't you have capital controls? What type of pricing do you put in place in order to encourage investors to trade? All of these things have to be thought about, and all of you who have money and are deciding where do you want to invest, you have choices about whether to go to any given African emerging market or whether or not to go to Kazakhstan. Okay, and we need to understand that that's where we need to get and retain your attention. So now you talk about South Africa in particular. It is not helpful for a capital market, even as sophisticated as we are, even in as large an economy as we are, to have a tricky political environment, because it overlays a sense for investors of, hold on, I might trust the legal environment, I might trust the exchange, but do I trust the economy in which the companies are operating? And so it should be no surprise that many business people, myself as included, have spent the last 3 years, I've probably spent 40% of my 365 days, 40% on SA Inc. issues, not on the exchange issues, because the well-being of the country is a fundamental precursor to the competitiveness of our exchange and the environment that we can offer investors. So that's an important thing. And then just to sort of maybe end with the reflection that on my point that you compete every second of every day. If you have a rocky macro-political environment, or you have, as we have had in corporate South Africa, a couple of scandals that start to rock people's confidence, the response has to be, that's simply not good enough. What are we going to do to actually make sure that people can trust that environment? So the first lesson is governance in and of itself doesn't stop people doing bad if that's what they're intent to do. But investors need to know that exchanges are there to create an environment they can trust, and that our regulatory powers are exercised in a manner that is increasing investor protection, is focused on investor protection. And most regulators, we can talk ad nauseum about this, but most regulators would say that's about disclosure. That's about putting the investors in the position of power to be able to know what's happening, not be caught off guard after the fact has happened, and then to be able to engage with the relevant companies or to trade out or in positions based on the information they have. So running an exchange is not for the faint-hearted, specifically in difficult positions. But if you wake up every day knowing that you've got to attract the attention of investors and you've got to make yourself as competitive as you can be, then I think you have the right sort of compass than if you sit back and you say, they must come. They don't have to.
A quick follow-up to that, you mentioned the linkages, the African Exchange linkages. Of course, the BRVM and the Johannesburg Stock Exchange, and I believe the LSEG as well. Is that right?
No.
Okay. How many African exchanges
are? Five or six involved in the African linkages. Okay.
Go ahead.
So we have exchanges on the continent that are of varying different sizes. There are only 5 exchanges on the continent that are members of the World Federation of Exchanges, which is the group, the trade association of the world's top exchanges, and you have to meet certain standards in order to be part of that. But you've got capital in certain places, like South Africa, that can be deployed to elsewhere in the continent. Speaking to Sanjay's point is that not in every economy has deep pools of savings already sophisticatedly established. So what you would like to do is to be able to essentially link African exchanges electronically so that you can be sitting in London, access your Bloomberg terminal and route your order through your preferred broker to the exchange in which you want to trade, as opposed to saying we have to have lots of dual listings of companies. So you create a virtual market. Now, that is an easy thing to say and a very, very difficult thing to achieve because of the speed of technology, because of the pricing differentials between these different exchanges. JSE's price to execute much, much, much smaller than any other African exchange because we've got economies of scale. And so you can immediately see that if people can only route through Johannesburg, then it's going to be difficult for the other African exchanges to get sufficient liquidity. So, but if you're talking about regionalization, there is a lot of discussion between the African exchanges about sharing ideas, sharing wisdom, sharing product development opportunities. And I think that's what we're going to see escalate as more investor push comes to please open up your markets. And so therefore sharing how we've done that is, we think, part and parcel of how we help the entire African markets open up.
In terms of these linkages projects and these collaboration attempts, etc., these are always posing some challenges. However, there are, I believe, 2 regional stock exchanges in Africa. One is the Central African one, and probably the more important one to mention is the BRVM. Edo, would you mind, just for the people not completely familiar with the BRVM, the West African Bourse, just briefly explain who you are, what the BRVM is, which countries it encompasses, and what your ambitions are?
Thank you, Robert, and thank you, Invest Africa, for the invitation to participate to this conference. Let me present briefly the BRVM. The BRVM is the regional stock exchange that is shared by 8 countries in West Africa. You have Benin, Burkina Faso, Côte d'Ivoire, Guinea-Bissau, Mali, Niger, Senegal, and Togo. Our market is a fully integrated capital market. We have only one Security and Exchange Commission, only one stock exchange, only one central depository, and we have only one currency to settle the transaction on the market. it is the only one and the unique model in the world of capital market that is shared by many countries. I think that is a political, economic, and institutional success for our region.
Absolutely.
The advantages of having a regional market are many. The first one is that you have a bigger market. You know, if we have a market in Côte d'Ivoire, Senegal, and Togo, we will have small market, and that cannot be interesting for international investors. As we have only one market for the 8 countries, the market is bigger. Actually, we have 46 listed companies on our market. We have 40 listed bonds in the market. The total market capitalization is about 14 billion US dollar. We rank at the 6th position in Africa after GSC, Morocco, etc. So the size is big. That is very interesting to have. And the advantages are also for a company or a government to raise money through the region. For Ivory Coast, for example, if they need to raise money, they can access Togolese investors, Niger investors, and investors coming from Senegal. So it is only one market. You can raise money through the region. That is an advantage for the government and for the companies. For the brokers also, you have a common license. You can go through the region. You can be a broker in Togo and have clients in Senegal, in Burkina Faso, and international investors also can access our market using only one broker. In Côte d'Ivoire, you can access the 46 listed companies in the region. So I think that is one of the models that is well functioning on the continent. And what we are trying to do is to replicate or to expand this model to other regions. You know that we have many initiatives on the continent in terms of integration on the SADC region and the East Africa region. In the West Africa region, what we are trying to do is to integrate the Ghana Stock Exchange, the BRVM, and the Nigeria Stock Exchange with the Cape Verde Stock Exchange. It is not easy to do that because we have many challenges to overcome. The first one is to harmonize the regulation of the 4 markets. That is very important, but we find a solution. We just say we have to adopt the international standards and the best practice, so we will take the regulation that is conform to the best practice and use it for the region. And we also try to have a kind of harmonization of our disclosure process and have our companies disclosure in all the region. And the challenge we have on this point is the settlement challenge, because we have at least 4 currencies. So it is not easy to buy a stock on the BRVM from Nigeria and pay in CFA, because there is no link actually between our central bank to have a settlement in 3 days. It is not easy to do that, but we hope that with the unique currency we'll have in the ECOWAS region in the next year, that can solve the problem. If we do that, if we achieve this project of linking our 4 exchanges, we'll have the second bigger exchange on the continent after GSE, with something like 60 billion US dollar market capitalization and 300 listed companies. So it will be a very big market, and international investors can access this market using any broker in the region. That not means that the BRVM will disappear, or the Nigeria Stock Exchange or the Ghana Stock Exchange will disappear. We are going to use the technology to have only one order book that you can view through Bloomberg or Reuters, and you just have to send your order to a broker, and the broker can execute the order in the market. The company will be listed on the domestic market, but they will be accessible on the unique platform, and we'll have a unique order book. At the continental level, what we are trying to do is to have a linkage between the big markets, as Nikki mentioned, and so we can link them, and any investor can go to South Africa using a broker in Côte d'Ivoire, and so on. The objective of this continental linkage, the first objective is to encourage local investors to go through the continent. As he said, we have some pension fund in Botswana that cannot buy stocks in Côte d'Ivoire or in Ghana. We need to make this possible for these local investors. And
to ask you a follow-up question as well, and probably to the whole panel particularly. Sanjeev, did you have a comment to make already?
Could I?
Absolutely, please, go ahead.
Comment. I mean, obviously this was news to me, what you've done, and I think it touches on a lot of the stuff that I thought was critical, harmonization, currency, regulation, what have you. But as you said, that, when it comes to investing, it's like the old Goldilocks story, right? That you will go where you feel comfortable, right? It's not incumbent upon anybody. And what I think the conversation must therefore try and explore as well is this great. Regulation is important, harmonization, regionalization. But the investment universe has to increase, right? I mean, what is the availability of quality stocks? What is the free float available? Because a lot of stocks are listed, but the free float is so tight that it doesn't trade, right? So I think maybe, and I'll be asking people who understand the market better than I do, that what sort of incentives and what sort of policies are there or being contemplated to encourage companies to list, right? Like, as you know, Africa is dominated by small, medium-sized, family-owned companies. What's going to incentivize them to come to the market, subject themselves to the transparency and the disclosure laws? What tax benefits can they derive? How will you make privatization and denationalization a priority which finds an avenue through the local capital market rather than coming and listing in London, right? So I think great stuff, what you said, fabulous, news to me, but the investment universe has to increase. And it's not going to increase till certain incentives are thrown in, I think, to make companies within Africa list in Africa.
So if I might, on the incentives, I mean, some of those incentives are in the hands of the exchanges. And I would put them, maybe the word incentive is wrong, but you can make sure your pricing isn't prohibitive. You can make sure that you've balanced the requirements that you need to meet in order to list with making sure they don't actually cramp the style of an entrepreneur. You can have different levels for different size companies, and you need to think quite creatively about that. The incentives, though, in relation to, for instance, tax opportunities for investors to invest in locally listed companies, etc. Our experience is that the revenue authorities are very loath to look in that because it feels like you're sort of rewarding the capitalists rather than actually supporting more sort of smaller entrepreneurs and so on. But incentives are really worth looking at. If you look at the growth in Toronto, in their venture capital in mining, they have flow-through share benefits, etc., which really work. But mostly, revenue authorities are loath to go there, especially if the economy is suffering. So we do need to expand the range of products, but you need to think of it, I think, through in a small economy, but that's perhaps not growing. Entrepreneurs don't actually need to come to market to get the capital because there are not that many entrepreneurs, unfortunately. But maybe you should be looking at debt funding, infrastructure debt funding, and other products that actually help grow investor appetite. I do think there is more than enough money on the continent to mean that companies don't need to go to London, but they get good investor traction in London, without wanting to do your job for you. They could get good investor traction in London, and there's a cachet. with being there. And so I think we have to be realistic that that's always going to be a space people want to look at. But I think it would be a mistake to conclude that there's no space for them on the continent.
Because I'm sure you have some comments.
Yeah, just two very quick points to that. And I think you've made some very, very interesting points, Sanjeev, and Nikki, yours as well. And I don't mind you doing my job anytime, it's fine. But the reality is that the SME space in Africa is a very, very interesting one. And that really is where the lifeblood of future flows will come from in terms of more investment products, more companies. But companies themselves are not necessarily ready. I've just come back from Angola, very interestingly, and spent some time with a group called EGAP, which is looking after the privatization program. And there are about 132 companies that have been cited as being privatization candidates and possibly IPO candidates. Out of those 132 companies, how many companies do you think were actually ready to list on the market any time afterwards?
Probably none.
Zero. Absolute zero. So the question here is about preparedness for companies to come to not just public markets, but also to become more accessible to companies like AFC and other capital providers, but from a very, very early stage. So early engagement with companies, entrepreneurs, to bring them into a series of best practices, an understanding of how to get a much deeper, a much longer association with capital providers over a period of time is essential in Africa. And that's not happening everywhere. It's happening in some pockets, but not in everywhere. The other point about London is that we very much recognize our role here in London as a global financial center as being one as a complementary role to Africa. We are not and don't wish to be the venue where companies come directly to. What should happen, there are scenarios where these wonderful people in this room with their deep, many years of expertise have learned to understand the risks of investing in Africa. And the importance of that is the ability to then price that risk appropriately. Now that can form a very, very interesting additional conduit, particularly where there are sectors that are probably slightly less understood across Africa, so perhaps the new economies, perhaps some of the areas and sectors that are probably just beginning to grow in Africa, and they can start to set proper reference prices across the continent. So there is a role for global exchanges across Africa in that particular realm as well.
I think we should actually turn to the wonderful people in this room and get stuck into some questions potentially. If you do have one, please do raise your hand. We'll get a microphone over to you as before, and just briefly introduce yourself as well beforehand. Are there any questions? There's one. Yvonne, please go ahead. Can we make a microphone to the front table, please?
Thank you. Fascinating conversation. Question. I agree with you, it's not really an either London or the local exchanges. To what extent are the exchanges collaborating with each other? Because from where I sit advising companies to list, the biggest, and therefore very focused on what makes investors comfortable in investing in Africa, London will always still be very attractive because of the level of governance and the level of enforcement of regulation, as well as just the accessibility to the investor market. So how are the African exchanges collaborating with the international exchanges just to keep both parts of the equation relevant in the near term?
Please, go ahead, Odo.
I think that we have a strategic plan for that. As an association, we know that we need to be more competitive, and we need to collaborate with some big exchanges around the world to attract more international investors, and also to share knowledge in terms of how to develop our capital market. For example, with LSE, we started a program that we call Elite Program to prepare SMEs to come to the market. The Elite Program was developed by LSE, and we implement this program in Morocco and in the BRVM. And we started the program last year, and actually we have already 20 companies that are involved in the program to be prepared for 2 or 3 years to come to the market. This year we'll add another 20 companies, so we'll have 40 companies. With the expertise of LSE, we are preparing this company to have a better governance, to disclose quality information, and have equity story. So I think that is something that is already on the track in terms of collaboration between our stock exchanges and LSE. That is one of the examples I can quote in terms of collaboration.
Are there any more?
Sanjeev,
Please go ahead.
could I just add one thing to this?
Go for it.
And some of it is an intuitive comment I'm going to make, but some of it I've seen evidence of. That one of the subtle deterrents, if you like, behind a lot of companies not listing or coming into the markets, or capital markets generally not being seen as a means of investing by investors locally, is there are large parts of the continent where there is still a fear factor around disclosing my own personal wealth, if you like, and how much of that from a confidentiality basis may actually leak out because of concerns around how information is disseminated. I know that regulators will not like to hear what I say, but I have seen anecdotal evidence and therefore the reluctance from a lot of people to invest in their own bourses. And I would just like us to see whether that is an issue that is being handled and confronted well.
So it's an interesting point because as a regulator, you want disclosure out there. So from a investor perspective, you actually want the details about who the major owners of companies are and in relation to the executives of companies, how they paid, etc., out there. And so that investors can actually say, well, okay, do I think that's value for money? What does that mean with regard to how comfortable I am? It is, though, one of the hurdles that particularly entrepreneurs have to get their heads around. Do I want my personal position, my personal wealth to be analyzed for but that's the price of coming to the capital market.
But it's the flip side also that I was talking about.
Yeah. Absolutely, no, I get that completely, and that is a different issue. So the price of coming to getting money from the public is being transparent about how you're using it and how you're remunerated for using their money. And it's very difficult for me to conceive of a situation where we should say, let's go more gently on that because you should be able to be trusted with the money. It's not how capital works. The flip side of that is actually a challenge for the exchanges, because investors should be able to move in and out of money, in and out of positions, unless they are large investors. So let's say 5% or something, where there are internationally standards about the size of your investment that then needs to be disclosed. But you should be able to move in and out without that being a matter of public record. And if people are concerned that that isn't the case, well, then I would think that exchanges need to think about, privacy of that information and so on, because part of building up an investment, a strategic stake in things, is be able to do that, quietly.
Absolutely. I saw a very eager hand being raised at the very back of the room. Can we please get a microphone over there? Thank you. Thank you very much, Yvonne, for your question.
Hi, Nikki. Welcome to London. It's Desnay Marcy here. Good to see you again. I just have a question on the gentleman mentioned the ELITE program in response to the lady asking about, collaboration with exchanges and so on. I mean, so there's the African Association of Stock Exchanges, which, correct me if I'm wrong, but, could be doing more in terms of visibility and pulling, exchanges together in the same direction. That's the one question, what's the status of the African, Securities Association? And then, does it not make sense to have regional exchanges, for example, in some of the smaller markets, where, for example, countries like Benin or the CFA countries. I mean, surely that would make sense in terms of capacity building, in addition to the technical assistance they're getting.
Yeah, so the African Stock Exchanges Association is the association of all of the African stock exchanges, and you have then regional associations that work as well to develop, to share information and develop standards regionally. So there's the Committee of SADC Stock Exchanges, which we're a member of, as an example, that is very involved in sharing information, and that's really important. Now, on your second question, I think it is very well articulated how well, if you are brave enough, you can create a really unique collaboration across borders, create one exchange, one virtual exchange that allows the pooling of capital and the access of capital from various different places to support entrepreneurs across that region. And that, if we were frank, is how we would design the continent too. There is zero reason why you should have 27 exchanges on the continent. Exactly. Zero. If we were starting again and we never had any exchanges on the continent, we would do a bit like I tried to explain it out of the exchange space as we'd do Microsoft in a big office. We don't all have Microsoft on our PCs. It's sitting in a big server downstairs in our offices, and we all have thin clients on our thin Microsoft clients on our laptops. That's how it works. That's how an exchange should, in fact, work. A hub and spoke, if you want to think about it, with a big piece of technology at the center and then deployed in the regional markets. In the local markets, there is zero chance that is going to happen because every exchanges are like national airlines. Every Minister of Finance wants one until he has to fund it. And it's tricky to, once you've got exchanges up and running, to consider a single exchange. But where there are not exchanges, I would honestly be saying to anybody thinking about creating an exchange, if you really want one, well, firstly, do you really need one? Okay, or do you need a capital market? Because you definitely need a capital market, and there is a distinction. If you decide you want one, then do it in the cheapest possible way. There is every way to link to technologies. For years, we ran our trading engine, our equities trading engine. We trade $2 billion a day, okay? For years, we ran our equity trading engine in London. We used the London Stock Exchange's trading engine. In London, 12,000 kilometers away. Do you think it cost us what it cost London to run a trading engine? Zero. We had a fraction of the cost. We got a world-class trading engine that you use every day. We got for a fraction of the cost. Now, anybody looking at creating a new African exchange has to answer the question, how do I do it the most cheap possible way? How do I partner with people to do that? Technology doesn't require you to have your own big data center and your own bespoke technology. It's just simply old school thinking. So I really would urge the rest of the continent, our colleagues on the rest of the continent looking at exchanges to say, let me be brave about how I do this. And it is, exchange is an example of what bravery can bring. And so it's therefore very possible to build thriving capital markets and one exchange to service them. And I wish we had the opportunity to recreate the African story, but that's not going to happen in our lifetimes.
You're not just talking capital markets, right? You recreate the whole story, generally.
That's a different thing. Now we can have a really long debate.
Ibukun, do you want to jump in there, or Edo?
The only point I wanted to make is that, Nikki, you're absolutely right. I think in an ideal world, having a Pan-African platform would be perfect. I think the issue, however, that we've seen, and you'll know this implicitly, is that every single regional exchange exists today, or separate stock exchange exists today, because there are local regional nuances that make that market fit for purpose for the issuers. If we had a pan-European or a pan-African exchange, you will find that you'll come across that issue of crowding out, where you have asset classes or companies that are viewed as being better than others. You'll create a tier or class of equity, which ultimately creates some issues. So there are some things to talk about the retention of the system we have, What we need to work on is how you make those markets locally more efficient. And when you create a uniformity of efficiency, then you can look at creating a Pan-African platform.
So are we going to debate now?
Yeah.
Because I would find...
We actually have another question from the back of the room. So we could definitely go on
I'm
this
only
topic.
teasing
But
you. I'm just making the
what's
point. It's
another
a
microphone to the
contentious
back
point.
corner, please.
Doesn't want us to get to.
Good afternoon, Douglas Rawlings from Moody's Investor Service. A very interesting point that you touched on, Ibukun, is that where a lot of the flow and where a lot of the needs are in terms of funding in Africa will ultimately be SMEs. And it'd be quite interesting to hear from the panel how you're looking at encapsulating that market. Nikki, you touched on tech. I think that offers an interesting alternative. So it'd be interesting to hear your views on that.
We have a full panel of tech coming up after the next keynote, I believe. Perhaps some short comments on looking at the future of capital markets. Technology is absolutely crucial. So potentially a good stepping stone towards not the next session, but the one afterwards. Any comments on technology and digitization in Africa's capital markets?
So technology, a critical enabler. It lowers the cost of entry, and it should be embraced deeply. But speaking to my earlier point, I don't think you need to create your own. I think partnering is the most efficient way to do it. But if I may answer the question on SMEs just briefly, it's a very interesting and difficult terrain to crack, because there's no doubt that the future of the continent is going to be driven by the emerging entrepreneurs coming up now. But you try to get large money to fund an SME, they are, in my country, deeply risk averse. So what we do is we do have an AIM equivalent, which we call AltX, which has lower entry criteria, lower costs, etc., to get small companies. But the mandates of the big money in South Africa don't allow them to invest in small caps. So you actually have to tackle the entire ecosystem. The point of elite and getting companies ready for listing, we do a lot of that. We don't use the elite system, but we spend a lot of time talking to companies and getting them ready for the demands of a public market space. But on the other side, the buy side has to have appetite to invest.
Correct.
And that's tricky.
Sanjeev, first move to Edo. SMEs, tech, what are your comments?
Well, I kind of, I couldn't agree more with the idea, I think, that you were espousing, that there is perhaps a serious need to look at what I would call a super exchange, right? Something that is a platform, easy come, easy go, full liquidity, easier, cheaper cost of transaction, and it as far as possible, with local issues obviously being the big caveat, working as a seamless exchange. Because I'll just tell you where my fear is, and I'm probably going to give you an infrastructure analogy, that I travel around Africa, and I see virtually every African country wanting to build a Pan-African airline, right? Or wanting to be the hub of Africa, right? And as you know, there can be nothing worse in life than having a party, be ready for it, and nobody comes, right? And I'm just getting the feeling that with capital markets also, we are running the risk of creating regional, local, domestic, international types of exchanges. And we are saying we are ready for business, to go back to Nikki's earlier point, and people are saying, what business is that, right? And I think we got to avoid that.
Edo, please go ahead. You had some comments as well.
I'd just like to say that technology is the future of our markets, because it is important for us to enhance our technology platform using blockchain, big data, AI, and so on. Yeah. I think that it is something that can help our market to develop very quickly and reduce transaction costs. That is key and very important for our market. And I think that digitalization also is very important to attract more retail investors to African market. You know, the evolution of the mobile phone in Africa countries. So you have to take this opportunity, bring these clients that are using already the phone to access the market using their phone. I think that is the future. And all our exchanges are working on this strategy to attract more retail investors to our market. Because as he said, the base of the development of African market in the future is local institutional investors but African retail investors also.
Absolutely. I'm under very strict timing instructions this afternoon, so maybe in the 1 or 2 minutes we have left, if you have one sentence in which you've envisaged the future of Africa's capital markets, one word, one sentence, what would it be? Maybe Nikki, starting with you.
Globally competitive.
Globally competitive. Excellent. Ibukan?
Huge opportunity with the right dose of regulation.
Interesting. Good. Edo, please.
Integration and technology.
Sanjeev?
Yeah, one exchange,
One exchange.
one law.
There you go. Lots of food to think about, lots of food of thought for the remainder of the afternoon. If you're interested in technology, there's a whole session back here in the room from 4 till 5, hosted by the Chief Economist for PwC West Africa. Landry, before I hand back over to you, ladies and gentlemen, please do put your hands together for this excellent, eminent panel this afternoon. Thank you.